So with retailers under a little bit of pressure and a lot of concerns about a slowing consumer, let's bring in someone who has a great pulse on the industry. With us on set for a change, Conor Flynn, CEO of Kimco Realty, one of the largest, if not the largest owner of outdoor shopping centers in North America. Their top tenants include TJX, Home Depot, Ross stores, Kroger, and Walmart. You've heard of that one, to name a few. I mean, business seems to be very, very strong. People are still going to stores. Your occupancy rate is super high.
It's very true. It's an amazing time to be, in the brick and mortar shopping center business. Kimco, I think one of the most surprising stats of all time is vacancy rates, since they've been tracking it for shopping centers, is at an all-time low today.
An all-time low.
So 20 plus years.
What is it?
I mean, it's like 95.5% occupied for the sector. And Kimco has hit all-time high on small shop leasing.
Yeah, I mean, how could you, you would just, normal churn would say you'd have 5% or more.
Yeah, the supply side is actually what's been very muted. So virtually no new supply, no new construction. 0.5% of new shopping centers are under construction, which is virtually zero. And then the demand side, store openings to closings outnumber 2 to 1. So you've got a really strong demand factor, diversity of demand, virtually no new supply, which leads to pricing power, which you're seeing on our leasing spreads.
Yeah, so you've got people who are going to the stores to shop. You've got people who are going to the stores to pick things up, right? Yep. And you've got people who are going to the stores to window shop, I guess, is what you'd say, right?
Absolutely. Traffic is up year over year. You're seeing more retailers use their stores that's closest to the consumer for distribution and fulfillment. So Ahold Delhaize, as you probably know from Stop and Shop and some of their grocery stores, just divested of Fresh Direct, saying that they're going to use their store base to deliver groceries to the home.
Oh, wow.
Similar to Walgreens. Walgreens announced today they're shifting their strategy, focusing on the store to ship to their consumers. Again, closer to the consumer. And then if you can convince the consumer to drive, it's their own time, it's their own gas, and all of a sudden the profitability is restored.
Yeah, it feels like the grocery store is not going anywhere, but I do wonder about disinflation over the next couple of years, because how does your business work? Is it sort of like a toll collection? Or, in other words, let's say if their revenues go down because nominal GDP is slowing and going from 8% to 1%, what does that mean for your business?
So the way the shopping center leases work is it's typically a fixed rent, and then you have annual escalators above that. So it really doesn't fluctuate with the sales unless you have a percentage of sales clause, which is more of a mall-based type of function. So we're more of a steady Eddie. And if you look back to all the years we've been talking through the pandemic, through retail apocalypse, through, even e-commerce, the onset of e-commerce, shopping centers have been sort of steady Eddie defensive plays. And it's primarily because we're everyday goods and services. Good days, bad days. People don't necessarily change their habits for groceries. People don't necessarily change their habits for services. In the pandemic, they did. But that's what snapped back to all-time highs now is hair salons, nail salons, health and wellness, beauty, all the uses that are really flooding to the convenient shopping center, because it's really what people are looking for.
And medical. I'm at these,
medical,
there's an IV rehab that I'm at, 4 times a week with some member of the family, and that always drives the shopping experience.
Yeah.
Let's talk a little bit about Bed Bath & Beyond. What was your exposure to that company? Is that now erased, cleaned out? And what has happened to those properties to the extent that you were they were a renter from you?
Sure. So they were one of our lowest exposures in terms of an anchor tenant. They were a little bit like 1% of our rents. And what we found was, because of that supply and demand imbalance that we're experiencing right now, we're able to raise those rents versus what Bed Bath & Beyond was paying.
And who's coming in?
So that was the nice part about it. Of the 17 leases we've signed, 14 different uses have gone into those 17. So you see the diversity of demand. So obviously the off-price retailers are very, very strong right now. So TJ Maxx, Marshalls. Home Goods, Ross, Burlington. You've got a lot of grocery, specialty grocers, Whole Foods, Sprouts, Trader Joe's. You've got sporting goods with Dick's doing quite well with their Public Lands new concept, as well as their Golf Galaxy concept. So you can see the wealth of different retailers that are looking.
Do gyms go in there?
Absolutely.
Fitness, like LA Fitness.
LA Fitness and Planet Fitness. All of those are definitely expanding and looking for more space.
Who else is emerging, kind of around the edges at a time when, as we heard earlier, the only thing that could kind of help some of these retailers struggling now, like Nordstrom, is if people suddenly go back to shopping brick and mortar and so forth. But what you're saying is they are still showing up. What are some of the next generation of businesses that you think could do quite well?
So if you look at what's happened, Ulta Cosmetics has been a dominant player in our shopping center for a long time. Now all of a sudden Sephora is leaning into grocery-anchored shopping centers, because if you think about it, the Whole Foods shopper is a Sephora shopper, and similar to Trader Joe's or who the traditional grocer is in that trade area. Macy's has now announced shopping center stores. And so originally they were calling it Market by Macy's. They've scrapped that and are just calling it Macy's.
Interesting.
Nordstrom Rack. I think you're starting to see really the consumer gravitate towards what's convenient and where is their value. And that's what you're starting to see really resonate. And if you think about a shopping center and the uses that can go into it, you almost have to ask yourself what can't work in a shopping center. It's small businesses. The occupancy costs are very efficient for those operators. And there's a lot of quick service restaurants, a lot of franchise-driven concepts, and that's what's really emerging as the new mom-and-pop small business operator are these plug-and-play franchise-driven concepts.
We just talked a little bit about the overall economy and concerns that it might be slowing. Are you seeing any of that?
We're looking for cracks. I think everybody is. Traffic being up is obviously a good indicator that those habits aren't changing. Small business incubation continues at a record pace. That's those small shop leasing activity that we're at record highs at. Pricing power is obviously in our favor. We haven't seen any dislocation yet, and I think what you'll start to see is usually when there's some level of pause in an economy, that's when people change their habits. And if the employment market stays strong, if they feel like there's confidence in that paycheck coming in, I don't think the habits are going to change to the grocery store. It really has to take, I think, a monumental shift to change that habit.